I could be persuaded that adjusting the algorithm to go on until we get to 21 million, that, again, I'll have to think more about that, but that might be the only thing I might break my...
In audio.
Just a gazillion for a large number, tons of flare gas that they could recapture. So the capability to create negative cost energy mining is, now that would put a whole bunch of miners out of business, but so be it. That's capitalism. So I think it's complicated. Now, I also am a big believer that free and open markets, of which Bitcoin is, as are other protocols, not just Bitcoin. Although I partial to proof of work. I think proof of work is the best. But I think that the transaction fees will be sufficient, and I think they will grow proportionally as the Bitcoin blockchain is used for an increasing number of things. Ordinals and storing digital artifacts is a great example. I mean, ordinals allow high value assets to be stored on the most secure chain. Well, why does that matter? And if you think about owning things, if I own a bunch of Pokemon on my Pokemon game, someday I'll own them instead of Niantic owning them. But someday I'll get to own my special Pokemon. And Colleen and I had a great conversation about this down at Permissionless, and from Brevin Howard. She was at CMT before. But she and I play Pokemon Go together, but it sucks that we do all this work converting time into value, and then the value sits on their servers. We would like to have those things. Well, for those, I probably don't need to pay a lot to store them somewhere. So I'm probably happy to store them anywhere. But I have a couple NFTs and other digital assets that I want on Bitcoin. So I'm happy to pay a transaction fee to get them stored on the most secure, most valuable chain. And Danny Yang, he's at Web, talks about this from On-Chain Monkeys, is the highest value assets in the world are going on Bitcoin. They just are. And that, I think, is a use case for the block storage, because blockchains are very efficient, permanent, immutable, beautiful ledgers. And as we migrate everything to digital, I think this is what's really hard to wrap your head around, that we're not going to have centralized storage houses of paper assets. We're not going to have centralized databases of electronic assets controlled by centralized organizations. That just isn't going to happen.
So can I poke at some of those things?
Oh, sure.
Because I think this is, so in terms of that argument of the cost of hardware for compute going down, I've heard that a lot, but I don't think that makes the network more secure. What gives Bitcoin its security as a network is the cost of the collateral that you would have to post to attack the network. So for instance, let's just use a super hyperbolic example. 20 years from now, let's say you could purchase a computer for $1 that was capable of producing the hash rate of the entire Bitcoin network today. Would that make it more safe? If you could buy a computer for $1 that would basically have the entire hash power?
No, but here's the thing. It's not the cost of the hash power, it's the power of the computer. So hashing cannot be unhashed by equivalent tech. You need something better. So you need quantum, for example. That's the one that everyone talks about. So the security tech can be super cheap, but using that same tech, you're not going to unhash it. You gotta spend more. Now, to your point,
You gotta spend. That's what I'm saying.
If the cost of that goes down equivalently, right? If I could assemble enough computing power to attack, and what an attack is, let's just use an even number. So let's say there's 10,000 nodes. So you got to hack in 10 minutes. There's a 10-minute window for a block. You got to hack 5,001 of the machines in a 10-minute window simultaneously to change the block and steal the bounty. It's a pretty daunting challenge. And people have tried, obviously. And here's the crazy thing. People have been trying that since 2009, right? Every day, people are trying to figure out how they can hack Bitcoin and steal all of it, and every other crypto. But there's not been one fraudulent transaction on the Bitcoin blockchain in the 14 plus years it's been up. So I hear you, but and maybe this is where I'm wrong. I don't think you can use the same compute to unlock the cryptography.
It's not about unlocking the cryptography. It's just about having, like, the hash power of the network is relative, right? Probabilistically, right? If you have 50% of the hash power in the network, then you're making 50% of the blocks. Bitcoin, the way that its consensus work, it responds to the leader, right? There are reorgs in Bitcoin that happen on a pretty somewhat regular basis, right?
Yeah.
So it's actually, you can more quickly make fraudulent blocks that consensus algorithm will think is the winner. And overall, like, just staying out of the weeds for a second, like, overall, it's the security budget is what the Bitcoin network pays out to its miners relative to the collateral that you've posted. If the value of the collateral that you post to the network goes down and down and down, the network is becoming less secure. Now, the other thing is, people talk about the difficulty adjustment. Bitcoin has this really elegant structure built into it, where when the hash power decreases, which is the overall amount of collateral and compute that is going towards the network, they make it easier to mine a block. So the argument, and this is the way that it's worked forever, is that when the hash power of the network goes down and the amount of collateral that is securing the network goes down, they make it easier to mine blocks, and that brings on more compute, more hash power, the network is more secure. The thing is, overall, it just imagine there's this, like, pool of rewards, which is largely coming from the block subsidy today, and it's being split amongst this network of computers all over. What the difficulty adjustment can do is dynamically adjust how many computers that reward is being spread across, but it cannot impact the size of the overall pool. So if that pool is going down, down, and down, the difficulty adjustment is not a long-term solve for that. The other thing, because I also am very, very bullish on ordinals, but let me just show you a chart here. So ordinals, when they launched, the inscriptions, the amount of inscriptions over time has been going up, but the amount of fees that got paid are basically peaked and have been staying consistently relatively low. And the reason for that is because ordinals originally generated fees because there was sort of this, like, you see this in NFT manias in Ethereum. People think the value is going to go up. People pay a lot to get in early, so you're tipping the block builders, who are the miners, to go first. Now there's less of FOMO, so people are like, yeah, you know what? I'll just wait a couple blocks. I don't really feel like tipping, and that's fine. So they're not really although they are filling up. There should be a chart here somewhere of the amount of the block space on Bitcoin has been much more full. But and a large part of that is due to ordinals, but it is not generating more transactions fees. It's generating some more transaction fees.
But not as more as you'd like to see. So, no, that's fair. But we're early, right? And I think having this debate is really important, and having the discussion is really important. Now, the punchline, right, where I think you and I probably differ, and again, differences. If two people always have the same opinion, one is unnecessary. And I like hanging out with you, so we can't agree all the time.
That's true.
So I don't think there's any need to ever even consider changing the 21 million cap. You would argue that we should. I just in real time made a slight change to my view, which is probably heresy, and people will yell at me. But given that there are lost or stolen coins, I might be willing to say we could replace those, right? And keep it at 21 million. Always keep it at 21 million. I haven't really thought about that, but I just thought about it in real time. And, as Satoshi emailed about this in the early days, he said, consider them a gift to the community. Like, yeah, okay, fine. I don't love that. It's actually better than, like, if you lose paper money, it's gone. Unless somebody finds it, then it's a gift to them. But if it literally goes down the sewer and it's gone, you lost it. No one else gets it. Here, if it gets lost, theoretically, the total value gets spread over a smaller number, so the value goes up and everyone wins. I could be persuaded that adjusting the algorithm to go on until we get to 21 million, that, again, I'll have to think more about that, but that might be the only thing I break my cap for.
Yeah. Now, I've actually asked a couple of, I'm also, keep in mind that I am not deep in this. I've only thought about it a little bit, but I have gone back and forth with, there's a guy, James Checkmate, who works over at Glassnode. I'll link these in the show notes, because I've been a little bit more curious about how the fee market actually works on Bitcoin, and what people who would not be aligned with my way of thinking are thinking about this. And by the way, I don't even know if that's the right solution. There are alternative solutions. But Checkmate and Pierre Rochard also responded to me about something. So I'll link both of their responses in the show notes. What I still can't get over is, again, just like we got into some of the technicals here, and it's not super important. If you're a nerd and want to geek out on this stuff, that's great. But if you just want a very high level, like, this is my framework. The overall security budget, what makes Bitcoin secure, is the cost of attacking the network, right? And what secures that is it's very expensive to post collateral in order to have an influence over the network. So as the cost of mining, actually, I don't think the hardware reduction actually makes the network more secure, because it actually lowers the cost for an attacker as well. Now, what could happen is, although transaction fees are relatively small today, the price of Bitcoin could go so high that that's still attractive for miners to secure the network.
And that's actually what I believe, right? And that's, now, it's amazing. Everyone's one-upping each other. So, there's a whole bunch of us that have said, 150, 200K, that's logical. Given, gold equivalence is 250K, right? Meaning the monetary value of gold, the 5 trillion, 10 trillion would be double that, but the monetary. But then, Kathy Wood came out and said, no, 4.5 million. And then Saylor came out and said, no, 5 million. And then somebody came out and said, no, 10 million. And I'm like, okay, great. You want clicks. Great. But yeah, that is the solution, right? Is that to date, we've had this amazing phenomenon that every halving, what should happen, right, does happen. Meaning, when I say should, meaning if we have a certain number of miners that are paying a certain amount for electricity and machines, and suddenly the block reward